Hello everyone, Charles here with slicktrade.net, and in this video I'm going to talk a little bit about the euro dollar. So we had some breakouts here last week from our market commentary. I'm just going to zoom in a little bit for you here, and let me just change this. Properties. Be a little bit easier to see instead of that white on white for those candles there. So this is the daily time frame, and if you're a Slick Trade member, then you know that last week we had some key levels. We had them here for the upper and right around here for the lower. Okay, and right here, this is where we're experiencing a bit of consolidation. Okay, now this was the key level to the downside, because if we broke below that, then we were either seeing a deeper correction, which would head down to where price did, which was right around here. Okay, and we just based that on previous support. And if this is not a deeper correction, this could be a trend reversal. So if these are terms you do not know, please check out slicktrade.net. We have a lot of free education on there, free videos and little tutorials under the blog. So check that out under the free education. And that will help to make some sense. Okay, all this is main like support and resistance levels. Okay, and to put things very simple, especially if you're new to trading, is that history repeats itself clear across the board in life and in the market. Okay, so when you see price resisting a level, you see it going in between, back and forth certain levels, like right here, for example. What we're looking for is that that is a consolidation period, okay? And we're looking for a break out of that. Now, things to look at are, what is the overall trend? Now, as you can see here, the trend has been long, okay? If we zoom out, it's been long since back in March of 2020, okay? And as you see, when you zoom out, you can see these consolidation periods a lot easier, okay? So let's bring this to about here and here. You see this? See how price goes back and forth in between those levels, okay? That's all I'm really mapping out. As far as these magical levels, okay? I've had a lot of people ask, like, how do you find these levels? And all it is previous support and resistance, or supply and demand zones. You know, it's really kind of one and the same. So what does this mean? Okay, this break, like I said, could be a deeper correction. We came down to this day one support. Okay, so how do you plan the upcoming week? How do you plan, especially if you're not in a position already? So if you are, if you were watching this last week and it broke to the downside, you're more than likely in this trade, okay? Unless if you only stick with the overall trend. But at this point, I mean, we've headed down quite a few pips. Let's see here. I mean, just this break alone was 100 and some odd pips there. Okay, so as far as the upcoming week, here are two new key levels for you. Okay, and as you can see, it's basically at the daily support and the weekly support. Okay, for the upper and the lower. What you can do is you can switch to a lower time frame, or you can just base your entry off of this upper and this lower. Okay, so if this is indeed a trend reversal, then this level right here should hold. Okay, 1.20666. Okay, if this level does not hold and price breaks above here, and when I say price breaking, I mean the candle body, okay? And because a lot of times you get these wicks, see these wicks here? I'm looking for the body itself, all right? I want the body to break above and to hold. So that means this being the daily time frame, this is 1 day in duration, okay? So if you see throughout the day that price breaks above or breaks below, okay, wait until that candle body closes or switch to a lower time frame, like the 4-hour time frame, and look for one of those candle bodies to close, okay, above or below a key level. Once that happens, and yes, you may miss out on some pips, but once that happens, that is a good indication, okay, that price is indeed headed in the direction that that you're going, whether it's up or down. Okay, so if price breaks above here, then we can expect, see where price comes and it breaks up above here. You see these wicks here, there's some resistance here, it comes down, then it comes right back up. Okay, see that? And then again, it happens here. This was what, a few weeks later? Yeah, this happened in November, this happened in January. Okay, breaks above, comes back down. You see these wicks. All right, so this zone right here, if price breaks above here, we can expect it to head to the top of this zone. Okay, now if it breaks above here and candle body holds, then we can expect price to head roughly there. Again, same reasoning. See all those wicks? So I just brought it down to around the candle body. And it's not going to be exact. You might say it's here, okay? I say it's here. Everybody kind of has their different, different tolerance, different range of pips that they're going for. Depends on the time frame that you're trading. Like I said, this is the daily. So each of these, I like to shoot for about 50 pips, but I trail around 25 to 50. So if price breaks above here and we do get this first target, that is 42 pips, okay? If it hits the next target, that is 79, okay? So that's kind of what I shoot for, is that 25 to 50 pip range. And it's tighter than some traders use, and that's just my personal preference. I don't mind missing out on pips because I like to protect my profit, and that's all there is to it. You can also look at a longer time frame, like the weekly and the monthly, to determine whether you actually stay in a trade or exit it. Okay, so hopefully that all kind of makes sense. And once you get used to trading and you're bringing up the charts every week and learning more about it, this just becomes easier and easier. Okay, so right here we have a third target. Okay, so that first target is 1.21087, then 1.21442, and 1.21732. Okay, so it's just creating a nice little map of things that can happen. And if we do head to the upside, okay, that's a really nice range. That's a total potential of 107 pips, okay? And that can easily happen. Like this happened just last week, okay? Sometimes the market moves more, other times it doesn't. Some weeks it moves 400 pips, okay? You just want to base it on the previous support and resistance. Okay, now if price heads to the downside and we break below this key level of 1.19625, then we can expect This is kind of right in the middle. About there. We can expect price to head with a target one of 1.19249. Excuse me. Right here, 1.18919. And that's pretty close there, 1.18608. It's kind of in between. You see, you could bring it right up to the top of these bodies. But if you look here and here, these match up a little better, so that's why I'm going with that. But that's just my personal preference, all right? Just gonna lock these in. All right, so that's kind of a plan. And you can do this really with any asset. Two of my favorites are the euro dollar and the dollar franc. The reason being is they are mirrored charts. That means that when the euro dollar is headed down, normally the dollar franc is headed to the upside. Okay, so that hopefully gives you a little idea. So go ahead and bring up that dollar franc chart and see if you can map out these levels and come up with a plan for the upcoming week. I usually do this at the end of the week, either like Friday, Saturday, or Sunday, and that just gives me kind of a plan. I don't usually get into a bunch of different assets in one week. I just like to take my time. I have no problem waiting, okay? I am not an aggressive trader. I'm a very mellow one. So hopefully this kind of helps, though, just to give you some ideas on how to map out a trade. So you guys have a good one. Like I said, if anything doesn't make sense, check out slicktrade.net. You can learn all about support and resistance and supply and demand, along with just price action and all that. So you guys have a good one, and I will talk to you soon.